Hello dear traders, welcome to InstaTV for another financial news release. At the beginning of the new week, oil prices held steady with the lack of any important fundamental factors. Yesterday in the afternoon, Brent prices rose above $65 per barrel but retreated from this level by the end of the day. Today the North Sea benchmark was seen at $64 per barrel at the market opening. The current price seems to be lucrative from the technical point of view, which may attract buyers and push the quotes higher. Brent futures with delivery in September declined by 14 cents to $63.97 per barrel. Traders cautiously absorb macroeconomic statistics, fearing to see signs of the global economic slowdown. Besides, tensions in the Persian Gulf raise concerns. Yesterday, Tehran acknowledged that it had breached the uranium enrichment limit in the nuclear deal. In response, the United States is most likely to take a harsh stance in its relations with Iran and to introduce retaliatory measures. As for now, Washington has increased military forces in the Persian Gulf. Today, in early deals, the Russian currency was trading in the red zone, following the suit of oil prices and other currencies of developing nations. At 10:20 of Moscow time, the dollar-ruble pair settled near 63.75 levels, having lost 5 kopecks from yesterday. However, things may change and volatility may increase ahead of the key event of the week. On Wednesday and Thursday, Fed Chair Jerome Powell will present the semi-annual monetary policy report. Besides, Mr. Powell will deliver a speech at the event that will be hosted by Boston Federal Reserve Bank today at 8:45 Eastern Time. Meanwhile, the US dollar strengthened as expectations of a rate cut by the Federal Reserve faded away following the upbeat jobs market report for June. Some analysts predict that the US financial regulator will reduce the federal funds rate by 25 basis points on July 31st. At the same time, other experts anticipate a rate cut no sooner than in September. Meanwhile, in Russia, Governor of the Central Bank Elvira Nabiullina admitted a possibility of a rate cut at the meeting of the Board of Governors on July 26. The key interest rate may be reduced by 50 basis points from the current level of 7.5%. Consequently, the carry trade operations with the Russian currency will get less profitable. However, if the Bank of Russia scales down its currency interventions, it will provide support to the ruble. For the time being, the negative factor for the ruble is the seasonally adjusted fall in the current account surplus that is partially connected with the ongoing conversion of ruble-denominated dividends by foreign investors. We keep close tabs on the market developments. Stay tuned.